Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, looking back to last week, since the RBA Governor Phil Lowe indicated that there was a possible rate hike in June, the Australian dollar has been somewhat muted. However, from the technical point, we are on a slightly bullish case with the RSI over the midway point along with the MACD over zero axis. Nevertheless, I would say that from a technical view is the market still is struggling to break over that level of 69.40, seen as minor. Above there and towards 69.85 is still viewed as a supply zone. It is ascertained that the market will eventually turn away from this top side of the range and look down towards this level of 68.85 and the base holding at 68 cents and reassess from there. My recent view on the euro and also the US dollar index was that we had a bullish outside range day on the euro and a bearish outside range day on the dollar index, but this has now been somewhat muted or negated in terms of how the market's looking now. The market on the RSI has broken down, and with the MACD also following, and also with the negated technical signal to the bull case, does give risk now of a test towards that region of 110.7085. In the unlikely event we get a rise, then I do still see the region of 112.55.65 as a supply zone. The dollar yen case still remains capped at 109.75.85 and still pressuring the downside of 109.15. It is risk viewed that the risk will see a move to 108.75 to 90 and reassess from there. Keep an eye on this because the trend may kick back into play, and if so, could see this bearish case maybe falling down a little bit further, as safe haven demand is still the main theme, with the risks still at this stage of the US and China, and also recently with Trump in Tokyo being somewhat concerning as he is still attacking the situation when it comes to the tariffs, as he still threatens China that they could add more tariffs. So that's put a bit of a safe haven spin, and especially on gold as well. The bears are still holding to that level of 126.40 and could see this to maybe go. However, a little bit of caution because there is a candle here that is bullish, and at present I haven't completely turned my view off the fact that we could see a rebound. There is some divergence from this MACD, and if we do go to see a rebound from here, could take out this resistance and look up towards 127.60 to 128.20. The gold outlook disappointingly retreats from 1,288, but not all is lost. I do feel that the market will still view the 1,270 to 74 as a potential demand zone, and therefore could see a rise up towards the region of 1,288 and higher to 1,300. Finish off with oil, but I'm still holding to a neutral view. The market hasn't hardly traded since plummeting through that $60 a barrel, and at this stage I'd rather sit out until we get some kind of indication, because at this point in time, the market is still looking a little bit concerning to the bear case. So not a place to hold longs at present, but as I mentioned, the view is neutral. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday poll. I hope you enjoy the great start to this new day.